Now that's cold-blooded.
Let's take a look at the charts, and then we'll kind of cover off a little bit more of the discussion and kind of focus in. So Bob, what we're looking at here is the long setups. You know already from your own interpretation that the invalidation is kind of there. What we're really looking at is what's the market reaction post data. We know what the reaction is pre, because we can see that now. It's pretty clear, right? What we're interested in is what's the reaction post, because like, none of this is anything meaningful at this moment in time. And even this is like the classic price action that you will spend more time guessing the motive of the market through here. So, you know, we see price selling, and then what happens is a lot of people now start taking the line of, okay, we're dumping pre, which means we're going to rip once the data comes out. Other people will take the line where they say, well, we're dumping pre, and it's going to get even worse when the data comes out. So we're very much in the period of time, and I can summarize this very, very well for you. We're in the period of time where those of you who are looking to gamble are seeking justification for why you're going to gamble. That's essentially what's happening here. So lots of people are looking at this price action, trying to make up a story about what's going to happen. Listen, I'm not here to say, well, I am here to say don't fucking gamble. But let me rephrase that slightly, because I am aware of the audience. If you're going to gamble, do so with a tiny amount, right? Do so with a tiny amount. Like, it's pointless me saying, I mean, I would love to say just don't gamble. Number one, it's a fucking coin flip. It's an absolute coin flip. You are just coin flipping this. So if you want to get involved in a coin flip to try and feel something on this Thursday, then fine. But be aware that it's a coin flip, and be aware the volatility is going to be outrageous once that data comes in. All right, I'll give my kind of overview, right, and purely narrative based for the way I think the market's going to move. I'm really surprised the market has moved lower considerably, like at this point in time. I think there is a huge amount of of unswept action up here, right, in that 19k zone. So I think there's a huge amount of kind of build up, and you know, lots of people on Twitter have been talking this week about open interest from shorts increasing throughout this region. So for me, it feels as though we're going to come up to this side of the market. I feel as though the market's probably going to move higher on it. The index reaction has been pretty good so far. You know, the index reaction here has been really good. And again, very similar picture here in terms of the build up. So we've got this build up here, and the NAS is already looking at getting close to that. The problem that you've got, which is just illustrating the gamble element of this so much as well, is, you know, even during this build up, the bears will just say that it will just be protection mode again. Right? It's just protection mode of the highs again. So what's going to happen is this is the top, and that we immediately just sell off lower again, and we just protect this structure. So this is the problem, that we're just caught in this, you know, both sides presenting fine arguments. I think BTC has got a decent shot of moving to the upside through here. That's what I feel. Do I want to trade it? No. Is meeting the estimate good enough for up? Well, that's also the thing about the markets, isn't it? So it's like, depending on the reaction, we don't know if like the news is going to be good news in terms of the market reaction. So there's different thought processes for this. We can hit the estimates, we can not, and then the market can react differently to the way that the presentation of the data is anyway. So it's kind of like that's the kind of even worse scenario, is it's not just the data, it's the reaction of the market to the data, both positively and negatively, which is why you should keep out until shit is settled. And shit ain't going to be settled in the next 15 minutes, okay? It's going to take a while to thrash this out. So we're going to go straight from the release. An hour later, we've got the US Open. So we're going to have another wave of volatility and volume come in. So we've got two major events back to back that obviously we'll cover off while we're being here. So you taking any alt position on these big level losses, or are you completely out until CPI? I'm short on Abe. We can discuss that a little bit later, just so I can get some clout points in. But we'll discuss that a little bit later. How many people are trading this before print? A fuck ton, an absolute ton. Listen, this is degeneracy at its finest. We are in the hours of degeneracy, the minutes of degeneracy here. This is where a lot of people are just punting a position. They are just hitting long or short now. They're reading a couple of tweets, right? They see that somebody with 100,000 followers said something, and they're like, yeah, okay, I'm going to go long. As I said, I think if we look at the chart, I would say upside is the most likely. Does that mean that, well, shit, I'm absolutely contributing to the thought process you have about, like, let's take the long side setup. The trouble that you've got if you try and gamble these regions is that the moves are usually so aggressive both up and down before, the true direction is revealed, that it's really difficult to actually stick the position. So, like you can enter long and you could technically be right in 10 minutes time, but you'll get stopped out in 5 minutes because the market will move so aggressively one direction first. And then this is a crazy thing, right? Because even people who trade, around these regions or like to throw a little gamble around these regions, they start doing things like they'll fade the first move. Right? So always fade the first move. So some people see, a big sell-off, they look at getting long in the hopes that that's the fake, and then we reverse the direction. Listen, gambled last pre-CPI, lost a few hundred, but you better believe I will do it this time. I am super surprised that, I didn't realize until Magus explained it recently that the reason we get the whipsaws is the MNs pull all the liquidity, so the spread widens so much. Yeah, they take off the risk, right? I'm super surprised the market has sold off this one. I really am. I was really quite shocked. In fact, I thought I'd missed the data release. I thought I got my UTC and BST time zones mixed up, because I was really surprised to see us down. Yeah. So I don't know what they're playing out on this side, but is it going to be a poll? Yeah, we're gonna run a poll, and we'll run some dramatic music into the release, and we'll also dive down the time frames onto the 1 minute as well. So we're gonna be building up the atmosphere nicely. The aim here is to build up the atmosphere sufficiently so in order for you not to put real money on the event, but instead gamble with channel points plus enjoying the theater of the price action playing out. I've been sloppy over the last few weeks, not gonna lie. It was a needed slap in the face. Nice. Well, look, I'm glad that it served that purpose for you. That is a positive in itself. Listen, sometimes we take positions before bed to feel something when we wake up. And I know that might sound crazy to some of you, but some of you will absolutely understand exactly what I'm saying there. Sometimes people want to get into a position before they sleep so that they have some enjoyment and something to look forward to in terms of like, oh shit, have I made money by the time I wake up? A lot of people feel that, right? That is a very real feeling. They look for a position. A lot of people say, I'm not trading overnight, right? I'm not having any open positions overnight. A lot of people look for the exact opposite, because when they wake up in the morning, they like the thrill of checking their phone and seeing what the price has done overnight. I'm telling you. Dramatic music time. All right, yeah, we got 3 minutes. Let's quickly run a prediction. Oh shit, I'm like way behind. I'm sleeping myself here. CPI 1 minute candle. What are we going to run it for? Oh shit. We're going to run it for 2 minutes. I'm going to go right now. Okay, first 1 minute candle on CPI. You can do it. Let's do it on BTC. Let's do it on BTC. It's the first 1 minute candle. So we're looking at the 1331 candle. Everybody make sure you get You get DB up on Twitter so you can see the result. We'll see the result in the chart as well, but you know. So what we'll do is we'll go into silence and we'll just watch the action unfold on the minute chart, and then we'll come back in and we'll discuss obviously reaction and get a little bit more detail in there. All right. Listen, we're going into action mode. All right. So let's just enjoy, and we'll go from there. 1 minute to go. We'll go into action mode, and I'll check back in a couple of minutes' time. We'll let the action lead the way. All right. So, 18.2? 18.2? Yeah, that's so weird that I haven't processed that we're that low. Wow. All right. So, CPI coming in slightly above estimate. 6.5% predicted on core. 6.6 hit. Estimated at 8.1, coming in at 8.2. It's all about the market reaction. It's all about the market reaction now. What have we cleared on BTC now? Where's like the clearance? Okay, so it didn't quite take out the low on the 21st. So it managed to run to 19.1, which took out all of these highs here. And then around the downside. Yeah, cleared everything apart from that low. Yeah. Oh, it did on Binance. It took the low from the 21st September. Okay. And on Bybit. Okay. Binance wicked to 17.8. Interesting. It's actually been FTX with more of the liquidity issues. So it didn't happen on Binance Perps. Happened on Binance Spot. You think the dumping is done? I mean, I wouldn't be confidently saying the dumping is done. 4 minutes in. We've got the US Open at 2:30. We'll have the US Open reaction as well. When can we trade again? I think you can, the big point is that immediate aftermath of the data, right? That's the big point. And you see it here. You see the swings in terms of the sweep up to 19.2 and then the reaction straight back down to the 18.1s. It's a huge reaction point for BTC to be swinging around. Your coverage here is, 6% swings in 2 minutes. So most tighter stops obviously aren't going to be able to survive this price action. When it comes to whether or not you can trade now, the big news is out the way. The big news is done. The big news is out the way. You can start thinking about, what does a position look like for you? What areas are you interested in? What lower time frame setups are developing, etc. So I think, you're now past the key point, which is the immediate reaction, which is where you don't survive on the lower time frames. I don't personally see that there's anything wrong with trading these regions as long as you're happy with, the setup that you're presented with. You've got to keep in mind the US Open, and again, we might get that injection of volatility around the US Open, but realistically, if you start seeing setups developing now, then I don't think there's anything wrong with you thinking about taking them. Again, we're very much in the period of time where people will be looking at this and saying, I think I fade this dump. I think we head back higher. Could be correct. Do you prefer a particular chart for this kind of PA, or do they more or less indicate the same thing? What do you mean by this kind of PA? Do you mean like the aggressiveness of the reactions we're seeing? Oh, a specific exchanges chart. So I usually prefer FTXs just because of the volume, but Binance's you can also make a very good argument for based on the same kind of logic. Take out current lows on the US Open and rip back up. Yeah, I mean that's the sort of logic that people will be putting into play here. I thought about what if we do a 4-hour bull div here? So if we get a recovery high enough to lock in a 4-hour bull div, that's a pretty good scenario to be in. Apart from that, higher time frames just look like this is momentum break to the downside. That's what the majority of higher time frames look like. All of this rejection here at the 50 and just looking as though they're rotating back down. So everything from the 12-hour and above is pretty atrocious in terms of continuation to the downside for BTC. I think lower time frames are obviously where we're in a position where things look as though they could stabilize. The hourly already majorly extended to the downside. The 4-hour very extended to the downside. Still a good chance with 3.5 hours left that this 4-hour looks considerably different on the close of it, and therefore makes an interesting discussion point around whether or not we try and hold some sort of divergence here between these lows. If we get a close over 18.7, We're probably going to end up diverging both the awesome oscillator and the RSI here. This one isn't going to close with the same strength that we're currently at, but that's very much the hopium side. Higher time frames say that this is continuation of the trend, that this is the momentum we've been looking for in terms of pushing the market to the downside and giving us that break. And so the higher time frames are very much saying that this is looking as though it's the fuel, the catalyst for continuation lower. Yeah, ENS is a very, very strong market overall. It was a really good bounce yesterday from ENS's perspective. Everybody needs to figure out how horny they are to position. That's the reality. And the reason that I say that is, like, there's really still nothing to be done here. There's still nothing to be done. Can you have a look at ETH? Yeah, of course. I forgot that ETH existed, to be honest with you. Lord, 1100s again. We're going to be back to a 3-digit shitcoin here. It's so bad for ETH, honestly. Like, this setup here is a horror. It's a horror setup. And that is as well. Because this here, the reason this is a horror setup is, like, this setup here is basically saying this is consolidation. This is expansion away from that consolidation. It ain't pretty. That ain't pretty for a higher time frame ETH. It's the same as BTC. The higher time frame is worse. You know, if you're bullish, very much focus on the 5-minute time frame. You know, just if you want to be bullish, zoom in. Ignore what everybody says. Don't zoom out. Don't even look at a time frame above the 12-hour. Just zoom in as tight as possible. Celebrate every green candle. Stretch the perspective on the charts to make sure the green candles look even bigger, and then go from there. Now, this is more interesting in terms of, you know, S&P reaction here, because this is a full downside candle with continuation now. So this is not the the recovery piece. We are continuing to fresh lows. Yeah, like the dollar was always gonna make the move. Now, I've kept on saying for a while now. Like, people are trying to buy a downtrending market. That's what people are doing. So when people are looking at buying spot crypto, whatever it might be, they're looking at buying a macro downtrending market. Not only are they doing that, but what they're doing is they are using the end of another bull market in order to determine when they buy. So people aren't just thinking about, well, when do I buy crypto? They're actually saying, well, not just when do I buy, but I'm also going to try and predict the end of the dollar bull market here in order to do so. It's absolutely the wrong logic. Like, just let the bull market be the bull market and appreciate that it isn't the time to buy. And these are also the same geniuses that thought they could call the top of a BTC bull market, or failed spectacularly in trying to do so because they bag held the whole way down. So the majority of people talking about the dollar topping out are the exact same people who failed to see Bitcoin topping out, but somehow now they are macro experts and able to predict perfectly the decline of the dollar in order to buy their risky internet coins. Would you consider being short at some point? I've got one short. Why the hate on DCA? I think it's a poor approach. That's all. I think generally as an investment approach, I think DCA is a relatively poor approach. Like, the majority of people that are in this stream, for example, like, you probably have some understanding of trading and when the market is, you know, doing certain things. I think for your average, absolutely never looks at a chart, has zero understanding of the trading environment, then sure, you know, consider DCA as a thing you might want to do. For most people, they generally have kind of better knowledge than you would need for a DCA approach. And therefore, I think that, you know, you don't really need to use DCA from my perspective as a you know, way of investing. You know, the point I always make is, like, well, why don't you just buy an uptrend? Like, why do you have to DCA? Why do you have to? And I'll tell you exactly the way it is, right? Why do you have to continue adding to a losing position? Because that's what you're doing. So one of the pieces of trading advice you get is never add to a loser. So DCA is the exact concept of having a losing trade and continuing to add to it, continuing to buy more of a position that is already underwater. Like, why would you not just buy an uptrend? Well, yeah, like, where do you invalidate a DCA? Well, there is no invalidation for a DCA because, the same posts come out, it's like, bought a little bit more today, DCAing here. Like, it's the same bullshit, and these motherfuckers are probably using, $50 in order to continue this premise of DCA that they've put in. Like, why buy a downtrend? Honestly, like, the issue that people have, is not buying. The issue people have is selling. So it doesn't matter. It doesn't undo the core issues that you have as an investor and as a trader, because it didn't matter if you bought Axie, for example, at $1, if you bought it at $5 when it ran to 200. You had so much time to be a buyer. The problem is you never sold it until it went back down to 10. Like, that's the issue. So, like, DCA doesn't solve the core issue that the majority of investors have, which is that they can't sell once they're in position. So, like, there's just a huge number of things. I think, like, DCA, people consider it this, like, great investment advice that, you DCA, and then eventually you'll be in profit. Most people don't even sell when they're in profit anyway. Right? Their targets start to stretch out. They start to, expect too much on the upside. They don't sell after, the market is showing clear signs of reversing. And, like, there are so many problems, but I just think that, like, DCA generally as a whole, for me, is just the concept of adding to a losing position time and time again, hoping that one day you'll be correct, when I don't see the need to do that, especially not in the current position that we're in. Like, why would I put my capital on the line in a raging downtrend in a dollar bull market? I'm holding the asset I want to hold. I'm holding the asset in a bull market. Why the fuck would I want a DCA on the other side? Like, people so desperate to dump their bull market asset, which is dollars, in order to buy this garbage. Set out with a goal to make $1 million, got it to 1.2, held on waiting for 2. Can I ask what it is now? 600k? Okay. All right. I mean, it's not horrendous though, right? Yeah, the unfortunate reality of the situation is you don't need to trade until a bull market. You don't need to trade until a bull market. Like, there's so much opportunity. There was so much opportunity in the bull market. Every day there was stuff going on for months and months. And you simply don't need to risk it. You talk about the dollar for a bit? Yeah, okay. Let's have a look. We'll just go back to single chart. We don't really care about what's going on now. We can see it all here in crypto anyway, depending on the reaction. Okay, let's take a look at the dollar. So I think the last time we looked at the dollar, we were looking at this point here. Which is another bounce off the 50 level. Okay, so trending markets, higher time frame. This is an area that trends should be looking to hold. So far, so good for the dollar. Now we've got a reaction point which is up here. Right? So this is an important part for the dollar to try and push past. This was a really great bounce from this breakout region over here. Great bounce, great from the RSI perspective, but now we're at that kind of awkward point of the market because any weakness around here, and we'll be looking at a potential lower high. So that's the reality of what we'd be looking at for the dollar. The assumption would be that situation won't take place because it's a very strong uptrending market, and therefore when we get a bounce like this, we would expect continuation into a fresh high. So we would look for a fresh high to be made. However, it is worth noting that in and around the region of the former high, there is obviously the ability for us to form that lower high and potentially look at start shifting the trend. Everything from here looks pretty good in terms of continuation to the upside, and like I said, just simply the market structure would lead us to believe that it is a fresh high here in the making. The 3-day is largely the same. Like, there's really nothing that's changed on the 3-day aside from the fact it looks like continuation. There's no divergences present. The weekly undid the divergence, so we had this play here exactly the same way we had back in 2014-15 with this same divergence structure potentially developing here, and then exploding kind of 11% to the upside. And we're basically in the same scenario here. This is the move that broke the divergence here. This is it here, and then if we're looking at the 11%, we're looking towards the 120s for the dollar. So we still haven't overextended. We still haven't got clear signs that the trend is slowing down. we would expect to see divergences at the point that the trend is beginning to weaken, which we're simply not seeing at this moment in time. Market structure is still very good. We're still bouncing at the exact regions we should be bouncing from in terms of, we're coming back down into support or resistance breakouts, and then we're pushing into fresh highs. So there's nothing really that is indicating any weakness at all on the dollar from pretty much any time frame. And again, these extensions here don't matter. It doesn't matter how overextended the dollar gets in terms of breaking the upside. There's still no weakness here. And you can see it here throughout this region. Look how long this took. So we've got 3 higher highs through this region here. And then you've got the 3 lower highs here on the awesome oscillator to show the momentum shift. But this is over 2 years that it did this. So again, I still think we're some way off the dollar, actually being at a point that we would look at confidently calling for a change in that aggression. So we've got 30 minutes until the US Open as well, and we'll get to see what the burgers want to do when they come online. Yeah, is the weekly bull div on silver played out? Absolutely, that is a potential. I think that is absolutely a potential for silver. Can you speak about sizing in these conditions? Yeah, I did a video on this yesterday for the Haven, just talking about risk management in general through areas like this and, periods of price action like this. Cred mentioned that most people size up because of the decreased volatility, but when the move comes, it can blow people out because we're counter trading. One thing is that people are looking to trade. So during price action periods like this, people are looking to trade, and it starts to turn more to a gamble than it does like a fixed trading kind of like path that we're on. So when the volatility dies the way it does, we tend to see increased size. We also tend to see a relaxation of the trading kind of like criteria or indicators you may usually use. So what people are doing is they're basically trying to create a trade. They're trying to force a trade because the conditions aren't great. And as a result of that, they're also increasing their size because the volatility is reduced, and therefore they are looking for, getting that value one way or another. So it's a really kind of nasty period of time in terms of trading because, like I said, most people are now just on the gambling side of things. They are forcing things. They're trading based on narrative. They're trading based on tweets. They're trading based on other people's indicators because they're desperate for value. That's really what's happening here. They're looking for value. Gone are the days where just the money just prints. They're seeking out value. So, from a risk management perspective, if you want to actively trade, number one, make sure you're actually taking proper signals. You're not just jumping to try and secure value in one way or another by, throwing your money into the market and coin flipping on a move. Also, make sure your risk is in check. So actually, during conditions like this, your risk should be far tighter. You should be far tighter in terms of what you're willing to put towards the market. Whereas when we have very strong trending conditions, and most certainly bull market uptrending conditions, you want to be as aggressive as possible with your risk, because then it really pays for it, right? The degenerates and the apes of the bull market are the ones that got rewarded the most. And although that seems like the, ridiculous thing, it's actually the right thing in terms of the market. We want to push risk when the conditions are very strong and very good. We want to tighten up and we want to reduce risk when the conditions are choppy and crabby the way that they are right now. And again, just want to make sure that, do not look at overtrading. Keep the very simple logic in mind. The vast majority of you in chat will be holding on to dollars. So the vast majority of you are actually holding a bull market asset right now. You are holding one of the strongest markets right now. There is zero reason for you to throw that away gambling on the direction of lower time frame crypto price action. The best thing you can do is hold on to your dollars until we have clear trading signals from crypto. But keep holding the bull market asset. Do not forget the fact that you are holding one of the strongest markets in existence right now. There is zero reason for you to throw that away gambling on the direction. So when it comes to risk and, everything that kind of comes around that, like, take a look at yourselves. And this was part of the video that I covered as well. No one is there to put a limit on you. You have no boss. You have nobody who's going to come along and put the shutters on your trading. You've got nobody who's going to come and put a limit on your broker. It's all down to you. So, this is where your personal discipline is going to either shine through, or your lack of discipline is going to fuck you over. What do you think of the RSI and the AO on the 1 hour and 4 hour dollar? Now, well, I mean, like, this is unless this closes back below 113.44, then you would expect this to continue. So unless we close back under this resistance, we would expect continuation from here. So yes, you've got this slight rounding here of the RSI, just comes back down to the reset point and then starts to take off again. If in the next hour and 50 minutes this closes below the 113.40, then that makes a more interesting scenario. Calio bull posting. Yeah, I mean, like, we're just at a period of time where you can just throw whatever narrative you want to on anything. The market is months away from making a decision on, new macro trends. So you can throw whatever you want to. I think that one of the big issues as well right now in terms of people on Twitter and people investing in general is that, the expectation is that a new uptrend begins and we're ready to go. We're ready to take off again. I think we're some way off, that big trend being established. Sure, in terms of, like, you can bull post here for a move back higher, that's fine. But, in terms of, like, the bottom is in, we're weeks and months away from that decision being something that's going to be, clear to us. So what I'm saying by that, what I mean by that is, like, please don't get carried away by people bull posting. Like, people who bull post generally have very short time horizons. The majority of people are looking for where their spot investments are. So please don't get carried away in thinking, oh, so-and-so bull posted, I'm going to buy spot because it must be that we're near the bottom, right? Like, just relax. Like, you've got plenty of time. You've got so much time. So don't rush to dump your bull market asset in favor of the downtrending asset just because of a couple of tweets. So when you see bull posting, like, how many times, like, just think about how many times you've seen bull posting during this entire, kind of 2.5 month range that we've been in. Like, how many people have been bull posting during this period of time? How many people bull post for a nice 5% move higher and then we just dump to fresh lows? Like, a bear post, okay, no, same logic, right? It's the same logic. It's like fluidity in the bias is the most important thing that you can have. Yeah, Twitter was full bull. I really don't understand, like, why you would be full bull 24 hours before. Like, if you have held on and not done anything, prior to CPI, and then the 24 hours before CPI you determine it's now the time to buy, I think you're asking for trouble. I didn't see many bullish posts, but then I wasn't on Twitter very much. The other problem, okay, so we're back on, like, the DCA discussion here with Mac, right? So Mac is currently shilling DCA. DCA, like, fine. It's my personal preference, right? The same way that some people will shill DCA, I just don't like DCA. So it's just a personal preference. There's nothing wrong with those guys that like DCA. My personal stance is that I don't like DCA. The other problem that I have is that for me, it's too great an assumption to make. So I know that Maine and Donald were talking about, that buying between 10 and 20k BTC would probably be very good in terms of the next cycle. My problem with that is, like, who knows? Who knows if that's true? That's a nice thing to think. That's a lovely thought to have, and I would love that situation to develop, but I don't have any real backup for evidence that will support that. And so I would much rather wait until I have evidence. That's my personal investing approach. So the DCA approach relies too much on the thought that in the future everything will be great, everything will be rosy again, and everybody will be happy and will be in a raging bull market and prices will be 5x away from where they are now. So my problem is there are too many assumptions that are made during a DCA process that basically are fueled by the hope that in future prices are significantly higher, which warrant my investments at this moment in time. There are 99% of coins that won't even reach 50% of their all-time high next bull cycle. Well, we know that the majority of coins that we see in the current watch list won't be the ones that we'll be interested in during the next bull cycle anyway. We know that the fresh wave of coins are going to be the ones that are really going to grab the interest again. Same way they did this time around. You know, all the L1s popping up, all of the GameFi stuff popping up. Like, they're going to be the ones. DCA equals don't care about it. A bit like YOLO. I mean, like, if you're going to DCA, I think you DCA a major. Like, that's it. You DCA ETH or BTC. I think that's the approach. I don't think you DCA alts because I think there's more value to be had in the bull market for what fresh alts come up. So therefore, I wouldn't DCA alts. I would DCA majors if you were going to DCA anything. Why would you assume it's not going to be rosy in a few years? It's not that I don't have to assume that it won't be rosy in the next few years. It's that I don't need to have that thought process one way or the other. That's all. Like, I don't need to have that thought process. It's not a thought that even should cross my mind at this moment in time. Because like I said, I'll just buy an uptrend. I'll just buy an uptrending market and I'll get carried by the market into easy gains without risking any of my capital in unknown situations. And who knows what happens if you're DCAing for the next 2 years? What happens if after hitting a low, let's say we go to 13k, what happens if after hitting 13k we trade between 13 and 15 for the next 2 years? I'd much rather be in cash and being able to do more things with my capital than being held up in things like crypto. What's Jelly Bean saying here? Because I've seen the response. Oh, we're talking about exceptions to alts that won't make fresh highs. I think Sol will probably be a very good buy in terms of an alt perspective. Now I have zero ownership of BTC. Zero ownership of BTC. What, in your view, are the chances that 1, crypto will not survive, 2, if crypto survives, BTC will not make a new all-time high? 1, I find very unlikely. 2, I think definitely crypto survives. I don't think there's a chance that crypto doesn't survive. BTC not making a new all-time high, I think, is also unlikely. I just have no idea of time horizon for that. You know, inevitably this market will go on and make fresh all-time highs. Just no idea on the sort of length of timescale for that. I think ETH staking unlocks could suppress price in the next bull run. I don't think so. I mean, like, ETH needs a bull run, right? Because the burning mechanism is so much stronger in bull market conditions, and so ETH needs upside. ETH needs usage of the network. It needs NFTs to be popping off. Like, ETH is actually one of those markets that actually should perform very poorly in a bear market because everything slows down, whereas it should also then speed up in a bull market because everything ramps up. Ape. Ape is interesting. Again, you know, I've always been, you know, very bullish on Ape as a whole, despite it being my swing short position currently. Obviously, the SEC case is a problem. So the way that I was very fortunate. I say I was very fortunate. I wasn't fucking fortunate. I read the charts very well and got a good short position on Ape prior to the SEC news. So I took a short position on Ape 2 hours prior to the SEC news, and then obviously got the market reaction in line with that, which is wonderful. The good thing about Ape and being short on Ape currently is that it makes it a market that's less attractive for buyers. So I should hopefully have less challenge on the upside. You know, it makes it an attractive short squeeze market, sure, but, like, you know, realistically, demand for Ape should be down because there's this case hanging over its head. And so I should hopefully be in a slightly more comfortable position from Ape, just because I think some demand is taken out the market. Like, why would somebody choose to buy Ape right now instead of something else, given the fact that they don't know what could happen with the SEC? Yeah, so I've got position up here. Just literally couple of hours prior to the SEC stuff coming out. So, and it was a very simple setup. It's a very simple setup. I won't go into too much detail because I kind of covered it all in the Haven. But all you had was a retest back into resistance. So you had the 4-hour support breakdown here. You had a retest back into resistance. You had the RSI coming back up to the 50 level here. You had the 1 hour also doing the same in terms of rejecting at the 50 level here. And then you also had a slowdown in terms of a 15-minute divergence into that level when you start looking at the awesome oscillator through this region here. So, you know, there were so many factors from a TA perspective combined, along with the fact that the 12-hour was pushing away from the 50 retest. The daily was pushing away from the 50 retest. So many confluent factors to take the position. It's one of those charts and setups that... Is the news visible in the chart? Is the news visible? And that's what true technical analysts believe, is that any major news should be visible in the price action prior to the news being released. And so in the situation for Ape, I think you could make that argument pretty clearly with retests into resistance, slowdown of momentum and divergences into that level. Already a very clear effort to try and sell this market through this region here. Just one of those interesting ones in terms of like TA versus news. And the ideal here is obviously that this is a daily breakdown would be the ideal. So I don't really want to see a recovery on Ape. This would be a daily breakdown of this region. And then the target becomes, at a minimum, the lows here at 3, and probably more likely the level becomes, you know, something like the 180s would be the ideal scenario here. That's the ideal. New York Open, 2 minutes. Okay, nice. We'll get on BTC and we'll take a look at how we react. Good lower time frame divergence between these levels now as well, supported by the awesome oscillator. So showing some signs of stemming the selling here. Yeah, what about negative 97? Yeah. Now I'm not going to add to the position yet, Bob. Like I don't want to over, like we're already again pretty extended. We've had the next leg lower, so I'm happy at the moment that we've pushed significantly away from the entry price. You know, I'm like 15% away from the entry now. So, you know, the current situation is really just holding on to that position, not looking at averaging down too aggressively yet, waiting for the reaction on BTC, because I still think this is a unknown scenario. Could go up, could go down, right? Apart from the fact we're already down pretty big today. But this level in here, I'm not really interested in adding to shorts, just in case we start to see that rally on BTC. Oh, no, don't worry. Like, with the amount of downside potential, I think, for Ape, and again, the downside potential for Ape would be reliant on the rest of the market breaking down, or Ape acting as an outlier in terms of SEC news, which is probably a long time away anyway. The Ape position is relying on the BTC significant breakdown of 19K. Right, so the Ape position wants BTC to get crushed down below the 17K low and into the 15s, basically. Do you have other side land? Yeah. USTC a good short. I think like lots of the time that I've looked at it, it's been like green on the day, but I haven't really looked at anything to do with it. I wouldn't personally. I think for the next bull run, I think any NFT marketplace tokens will be exceptionally interesting portfolio acquisitions. One coder. I think that NFT marketplace and those who launch tokens during this period of time will also be super interesting. All right, so US Open now. Burgers are here. Can one view CHZ as part of the NFT narrative? I think so. I think that would be fine. Mana lost the 0.73 level fairly convincingly. Thoughts on the meta pattern charts? Yeah, struggling at the moment, Ed. Right, you know, market obviously reacting slightly ahead of the news from a crypto perspective, so we're losing a lot of those levels. We always talked about the patterns being good in the event that the market turned green. We're yet to see that situation develop. we've got plenty of time left for today. You've got 11 hours until that daily close, but the situation isn't looking good in terms of holding those divergence patterns. It looks as though the other side of that's coming in, which is that momentum which pushes us to the downside. So for now, it's just a sit and watch. We're not really interested in over-analyzing it until the end of the day. Feels like the market's confused by the data. CPI didn't come down. CPI did come down, but not as much as expected. Yeah. Do you have a long or short scenario, perhaps? I don't think you short here. I think the position you would look at taking from here is the long side if we are to get some reaction back higher. The short side, I don't think you touch the long positions until there's a significant breakdown. If this is trend continuation, then we're just waiting until the next block of consolidation. Yeah, what if we grab until FOMC? Yeah, also possible. You wouldn't short here as the range gave way. I wouldn't short here. No, I would still be far more tempted to be in long positions here if you were forcing me into trading this. I would be far more interested in taking the long side still than I would be the short side. I think if you're short from higher, you're in a really comfortable position because you've got plenty of room to manage. I don't think I'd be shorting this. Do you have any idea why crypto broke correlation to the indexes? Well, maybe we just played catch up. Because remember, crypto is held up. It has been slightly stronger than indexes. And so maybe this was our period of realigning. Crypto has held up surprisingly well in comparison to the indexes for, the last, 10 days or so. And so I think that, maybe it is us closing that gap. Also on ape, given the level of support we're now at, I wouldn't long ape. I think there's better markets to long than ape, personally. But then I am slightly biased in that decision. If no ape, then which coin to market purchase? BTC or ETH. I'm just looking at crypto prices for the first time today. What do you mean you've missed the biggest data event of the month, and you didn't even see the pre-CPI sell-off? If the RSI touches the 50 level or comes close, like 45, between the two divergent points, does it still count as a div? Technically, yes. We absolutely rather it not touch the 50 level. If it touches the 50 level, you need to be very careful about continuation versus the divergence being confirmed. So if you've got a 50 level touch and then you come back down and then you create a divergence point, I would just wait a little bit longer until you have confirmation of that. Yeah, like this one here, again, is an awkward one. You can see the strength of the sell-off through here. This is one of those divergence structures. It's just better to just sit out. It's better to not even become too interested with this. I think the level in here is probably this one. So if you're waiting for kind of like reclaims or some strength, then I think it's around here that you're probably looking at. And interestingly, look at the reactions that we've seen below this level on these occasions here. Let's go line. So this has been a good reaction point for us overall, and then we've had these two dips lower that have been immediate recoveries back above. Whether or not we get a third here. It's a relatively interesting kind of note of the reaction that we see underneath this level. So I think this level here is a really good pivot point for the market. If we start to see a recovery above 18.6, it might be an interesting setup. That's the Dalai Lama. Horse coin showing good reaction from 1.1. Yeah, very strong reaction so far. Oh yeah, dipping down to that little spot down here. Yeah. Yep, good reaction for it indeed. The dollar retesting at range high. Yeah. Are we buying the SNX weekly bull div on the AO at the end of the year? I think it would definitely be on the radar. Arthur told us ETH was going to 10k after merge. He just missed the decimal point, that's all. That's all. It was just the decimal point he just missed. I don't think he meant 10k. He couldn't be that far wrong, surely. Yeah, and he's got the classic out. You're right, Dunning here. he's got the classic out. He didn't say when. So in 7 years' time, when ETH trades at 10,000, then he'll retweet the article and say "told you so." The classic clout collection. And he also said NFA, which is the most important thing that you can put onto anything. Oh, you said end of year? Alright, he might struggle on that one. Anything else had a decent reaction? What's anything green? Looks? This is another one of Arthur's specials. I mean, it's just quite nice to see large numbers, regardless of the direction. 66R. That's the sort of trades I like. Link. This is a poor shape here. Rejecting mid. Coming back down to the lows. Atom rejection at the level here and continuing to push. Similar to the ape picture. Yeah, this is like 0.5 surely. XRP looks decent. Yeah, decent recovery. Yeah, the MKR rally. Jesus. ENS looks very clean through here. I think this is one of the nicer markets. This level here is really important. So the reason I like this so much is because there's a very clear invalidation. A very clear invalidation point. So I really like the setup. And then I think if ENS starts breaking through this 18 region, I think it's got a pretty healthy area it's going to look at challenging. There's some resistance here around the 21, 22s again. I think ENS is one of the better looking charts. We've said that regularly on stream. It's one of the strongest looking markets. AR, wow. Sending it. Yeah, daily closes above 905 look pretty decent. Sending it right after it invalidates the div. Now this is something that we've spoken about before in the Haven, which is the fuck you leg. Right, I'm going to start referring to it as the Caroline leg. So this is when you get a lovely divergence pattern, and then the market delivers kind of like this final fuck you move of the market, whether that be to the upside or the downside, depending on where the div is, and then continues to play out the divergence. So I'm going to start referring to this as the Caroline leg down or leg up, because this is basically the fuck you divergence traders. We invalidate the setup and then we play out the setup. What would you do if you hold euros? Swap them to pounds. All right, let's begin summarizing. So we've got it out the way with CPI done. Negative reaction pre-CPI. So the market right now is still in kind of this chop phase. I think actually this hourly chart is probably one of the best representations that we can get through here. So this chart here is actually a relatively decent looking chart. Gives us a good indication of the reactions that we've seen below this level previously. And obviously what we'd be hoping for is a similar reaction this time if BTC is going to come up and challenge some of all of this build up here. The one area that I think is probably notable is that we've got this area over here, which seems like a really good retest point into the 19.8s. And then we've also got all of this build up here in terms of the short side. Now, we didn't actually manage to clear any of this yesterday. We didn't clear this high here when we got the little evening rally, and then obviously we sold off then into the early hours and into this morning. So this build up of shorts is the area that I think is going to be challenged. If it's challenged, we would expect to see this recovery above 18.6. So we would want to see the market trading above here. And then we'd be more comfortable in the recovery. And we'd be looking at squeezing this region and potentially tapping into this 19.8. That's quite a way off. For now, the market is trading below this level, which is not great. Bulls want to see it recover quickly. Bears want to see it lock down. So bears want to see us move into this level here on a lower time frame recovery, reject, and continue into fresh lows. Higher time frames look omega fucked for BTC. They look really, really poor. So the higher time frame BTC picture and the majority for alts looks in a very poor position right now. All of the momentum is ticking down. All of the price action kind of looks as though we've just done a consolidation region before producing the expansion or the next leg lower. And that's the way the market is currently shaping up. Stay fluid in the bias. I don't think this level where we are right now is where you want to be opening fresh shorts. I think, make sure your levels or your squeeze areas are mapped out on the chart and look at positioning to the short side when that kind of criteria has been met. Otherwise, look for your own personal long signals if that's the way that you want to try and play this. For me now, we are getting far closer to an area that I would like to be a spot buyer. So I think if we do have another significant higher time frame leg lower through here that takes the lows at 17 and starts trading lower, then we're starting to enter the regions that I will be far more interested in being a spot buyer of this market. But we shall see. We shall see if this is resolution time or whether or not we've got yet another squeeze, yet more crab price action, yet more chop. I think by this point, people are happy to accept lower prices as long as we get a significant move out of this region. Listen, hombre, you are memeing beyond. So yeah, big thank you for joining me today. Thank you, Bob, for dodging Starbucks staff long enough to see it till the end of the stream. One last reminder. Ref link is in the original tweet. If you would sign up there, it would be greatly appreciated. If you are interested in joining the Haven, link is in chat. I'll be back on Sunday night, so we'll be able to have a good chat over the resulting price action over the next 3 or 4 days and see the results of what has come from this. And we'll take a look back in at this 18.6 level and see whether or not it held any significance or not. And get a good overview heading into the Futures Open on Sunday. So once again, thank you so much, everybody, for being here. It's truly, truly appreciated to have all of you chatting and active, and to have a pretty good audience today for the CPI print. If this is your first time here, I appreciate it, and I hope you'll come back. If this is your 100th time here, I know you'll be back. Have a wonderful rest of the week. Hope the P&L is beautifully green for you all, and you are all successful. And I will see you on Sunday evening. Enjoy the weekend too.